The problem I've seen with a lot of traders is that, when they start using indicators, they don't know the end point.
So I'm going to talk about only one indicator. It's not going to be like you have so many indicators on the chart so that you'll have some colorful charts, not like that.
Is it plain buying, selling on Supertrend on the 1 hour time frame, or is it something different?
So what I use is, I use a multi-timeframe analysis here. So I have the initial stages were like, it was involved with a lot of luck, because beginner's luck they used to say, right? I also had my own luck. I used to make some money, lose some money. That is how the period started.
Finally, can we end the suspense and you can tell us what indicator are you going to explain to us? दोस्तों हमें बहुत सी रिक्वेस्ट आई कि पोजिशनली इतने बड़े बड़े ट्रेंड्स आते हैं मार्केट में, इन्हें कैप्चर करने के लिए कोई स्ट्रैटेजी बताओ। तो ये आज का एपिसोड डेडिकेटेड है पोजिशनल ट्रेंड फॉलोइंग के लिए। हमारे आज के गेस्ट हैं सुंदर, अ प्रोफेशनल ट्रेडर एंड एन एक्सपर्ट एट ट्रेंड फॉलोइंग। सुंदर हमें बताने वाले हैं एक सिंपल मल्टी टाइम फ्रेम स्ट्रैटेजी के बारे में, जिसको यूज करके आप बड़े ट्रेंड्स को कैप्चर कर सकते हो। तो चलो शुरू करते हैं आज का एपिसोड और सीखते हैं कुछ नया। Sundar, a very warm welcome to Trading Ki Baat. So good to see you on the show, man.
Thank you, Arjun, for having me here, and thanks to Groww team for having me here in your show.
एक छोटा सा डिस्क्लेमर है व्यूअर्स के लिए। यूजुअली हम अपने सारे शोज हिंदी में रिकॉर्ड करते हैं, बट सुंदर इज फ्रॉम कोयम्बटूर, तमिलनाडु। तो हम ये वाला एपिसोड इंग्लिश में रिकॉर्ड करने वाले हैं। आई नो कुछ लोगों को थोड़ी सी मुश्किल होगी, बट प्लीज डोंट लेट इट बी द रीजन कि आप ये एपिसोड ना देखो, बिकॉज सुंदर इज अ वेरी एक्सपीरियंस ट्रेडर और ये हमारे साथ कुछ जेन्युइनली अच्छी इंफॉर्मेशन शेयर करने वाले हैं। सुंदर, आई रिमेंबर यू एज वन ऑफ द अर्लीस्ट ट्रेडर्स ऑन ट्विटर हु यूज्ड टू शेयर हिज व्यूज, and you've been trading for a very long time.
Yes, yeah.
So where did this trading journey begin from?
All right, so I'm an BTech IT graduate from Coimbatore. I was working with IBM as a software engineer. It all started around 2016 and 17 when I came back to India from UK after my work. I started developing interest in the markets after seeing my dad trading. He used to do stock investments and trading. He used to buy stocks and sell, mostly banking stocks, because he's a retired senior manager from Union Bank of India. So he used to buy stocks and sell. So I thought, okay, what does he do? He says that I used to buy stocks for 100 rupees and sell at 110. That is how I make money. So I thought, oh, you are buying only 10 shares. Why don't you buy 1 lakh shares and make the same money? He used to laugh at me. You need a lot of money to do that kind of a trading. So that was the initial period. I got stuck into an idea called, okay, you can buy some stocks online and you can sell. It's same like a commodity trading, right? You buy some stuff and you sell it for a profit. So that was the time around 2016. So when I got back to India, I started researching into stock markets. I started learning how to trade, how to pick a stock, how to buy a stock. So that is how the period started. The initial stages were like, it was involved with a lot of luck, because beginner's luck they used to say, right? I also had my own luck. I used to make some money, lose some money. That is how the period started. It was around 2016 to 2017, yeah.
Sundar, you've been a professional trader, you are a professional trader, and I'm sure you trade different kinds of setups. Yeah. So what all trading strategies do you have? What are the different styles of trading that you incorporate in your day-to-day trading?
So currently now I'm a professional trader. I do it full-time as a trader. I do intraday trading, and I do mostly trend following in intraday, and in positional trading also I do trend following. So I do 2 trend following setups in intraday and positional, and I do another type of trading where it is called as mean reversal. So if we do trend following setups alone, what happens is our drawdown will be quite bigger in time, in terms of equity as well as time. So to manage that, I do mean reversal as well. So these are the 3 types of trading which I do.
And what is it that you're going to teach us today?
So today I'm interested to talk on positional trading setups. So this is like a boilerplate kind of setup where you can reuse on any kind of instruments. Say it like Nifty, Bank Nifty, Nasdaq, Gold, Bitcoin, any kind of instruments, you can use these setups. So when you use these setups, you will be able to find out what kind of the trend the market is in, how to get an entry point where you can put your stop losses in. So this boilerplate setup will teach you what this instrument is currently doing now. So once the trader has that catch, he will be able to plan his risk management and put a trade on.
Sundar, some kinds of setups are based on pure price action, while some rely on some kind of a combination of indicators.
Yes.
The one you are going to teach us, which of these 2 categories does it fall into?
All right, so when I started with naked price action. That means you'll have just like candles, candlesticks and price alone. So that's what we call as naked price action. So what happened over the days was, with naked price action, we won't be able to figure out which direction the market is going. It will be very difficult. If you're a professional trader, you can figure out which direction the market is moving on. But for a newbie, if you give them a chart, they will not be able to figure out which direction. So think of this analogy. You got a new car. You are a newbie driver. You are going on a road with no road markings, no lane marks, nothing. You are just driving. So you have to make your mind that there is a turn coming ahead. So I have to stay to the right. Or else if a turn is coming to the left, you have to stay to the left. That's how you have to make up your mind. But in trading, it's already, you have a lot of emotions going in. And if there is a market direction turning, and if you do not have anything on your chart, then you are going to make a lot of mistakes. So you have to use some type of directional indicators which will help you guide the right direction in the market. So when I talk about price action in naked form or price action, the indicator which you use as a help, I still tell a lot of people that use some kind of indicator which will tell you the direction. That is really, really important. Even if you're a professional trader, a lot of traders still use indicators, right? It's not like it's really bad. It's good to have indicators on your charts. So today I'll talk about one of the indicator which I have been using it for a long time now. I'll talk about it a lot in the interview here.
The problem I've seen with a lot of traders is that, when they start using indicators, they don't know the end point. As in, they keep on adding indicators to their charts, seeing that, or feeling that they'll give them more and more clarity. What happens is the opposite of that. Like they'll add RSI as well, stochastic as well. So the indicator that you are going to tell us, is it going to be multiple indicators or just one indicator?
Alright, so I'm going to talk about only one indicator. It's not going to be like you have so many indicators on the chart so that you'll have some colorful charts, not like that. It's just a directional indicator. It will just tell you direction and also it will tell you where to keep your stop losses. Okay. So once you have only one or two indicators, then you can have a proper decision. Or else what happens if you have multiple data points on your chart, you will not be able to make a decision, okay, should I put a trade on, should I wait for the next indicator to turn green? So when all the indicators will turn green, the market will go down. Okay, so that's what happens. So have enough number of indicators that will help you to trade. Otherwise, you will have a lot of data and you will be paralyzed knowing what to do with that.
Now, Sundar, finally, can we end the suspense and you can tell us what indicator are you going to explain to us?
It's not a big suspense. A lot of people still use that. It's a Supertrend indicator. It is a directional indicator which makes use of volatility. ATR is one of the volatility data which Supertrend uses. So with that data, the Supertrend will tell you which direction the market is moving and will also trail your stops in that direction. So for example, if traders are trading now with lesser volatility, they can have a stop loss like 30 points, 40 points, any type of percentage basis stop loss they can have. But what if we are in the year like 2020, where we were stuck with COVID and markets were swinging really bad. So in those type of period, we can't have a like rigid stop losses or a percentage stop loss. We can't have that. We have to have a volatility based stop loss so that your trade will have enough room to move and forward. So ATR is one data which will help you to design your stop losses, and Supertrend is an indicator which makes use of ATR in a very well balanced way.
So Supertrend is one of those indicators which is very popular with traders. Personally, I use it a lot. But I think there might be a few people watching this who not be aware what Supertrend looks like. So Sundar, can we quickly show them that this is how you apply Supertrend, this is how it looks like?
Yes, definitely we can do that. So in today's session, we'll talk about Supertrend as an indicator, how it will help traders to trade in the right direction. So Arjun, let's take this example, okay? So if you want to go to, for example, you're planning a vacation to Goa. So most probably you will take a flight from Delhi to Mumbai, then to Goa, right? You will not take a flight from Delhi to Kolkata and go to Goa, right? That is an opposite direction. So once you want to reach a destination, you have to go in that exact direction, correct? In the same way, market also does the same. If you think the markets want to go up, you might have some price in target. If the markets want to go up, it definitely has to follow that path. It's not going to go down 1000 points to go 100 points. The same way, if you think markets are going to go up, you will wait for the markets to come in that direction, correct? The same way, what Supertrend does is, it will show us the direction first. It will tell us, okay, so the markets is in the uptrend. How to know that? Supertrend as an indicator has its own bands. These are like the stop loss bands which will get revised based on the ATR. All right. So as a Supertrend, when you apply Supertrend on a chart, you have the ability to choose a time frame. So we have applied Supertrend on Nifty index futures. This is the continuous current contract. We have applied on that on 1 hour time frame. So we have applied that Supertrend. What are the settings we are going to use? So 1 hour is a time period. In a day, we have 6 candles as 1 hour. So let us take as a week for an example. So in a week, we'll have around 30 to 31 candles. So we are just considering 1 week's data for this Supertrend ATR to work.
Got it.
So on this period, we will see where actually the Supertrend will give us a trade entry. So it is very actually simple to know that as a Supertrend, we'll know whenever we get a lower band as an uptrend, we'll take a trade. So it gives us a signal. So we get a trade here, and when we go ahead, we take a trade here as a short trade. So this is what Supertrend tells us, when to take a trade and when to take a trade on the long side and when to take a trade on the short side. And one more important thing is Supertrend makes use of ATR. ATR is a volatility based indicator. Okay, so it is average true range. So the ATR will be higher when we have a higher volatility period. The ATR will be less when we have lower volatility, correct? So that is why I told when you are trading in the years like 2020, we'll have a higher volatility. In that higher volatility, we need to have that kind of stop losses, okay? So here, what we do is, we add this ATR. This ATR will tell us for each and every candle, what is the average true range. The true range is nothing but it calculates based upon today's high and low and previous day's close. On these 3 data points, it keeps on taking average for the last 31 days. Okay. So that is the period we have been using for both the Supertrend and the ATR. So once we take a trade here, we are taking a long trade, and what will be the stop loss? The stop loss will be the factor of this ATR. Okay. So on this candle, if we see here, the ATR is showing us 75 points. This is for the year March 2025. But if we go around years like 2020, March, April, this ATR points will be around 200 or even 300. So at that point of time, we'll have a bigger stop losses in place, correct? So that is one point. When we take a trade here, what happens is, whenever the candles keep on moving in our direction, the ATR based stop loss will also keep trailing. Correct. So that is why we call this as a stop loss trailing based indicator. It keeps on trailing a stop losses also together. Whenever market actually moves against us, what happens is, this stop loss will not trail below, it will keep on the same place, it will be static, all right? And the market moves again in our direction. And what happens? The ATR will keep on moving up, and we'll have a uptrend. We'll have a uptrend, our trade will be on, correct?
Now Sundar, just to add, like there are settings in that Supertrend. So there is one is the period and one is the multiplier. And by default, I think it is 10-3. Okay. So you use that, or you have a different kind of a...
Yes. So what I use is, I use 31 because I'm using 1 hour time frame. Okay. So 1 hour in a day, we have around 6 candles. From 9:15 to 3:15, we have 6 candles of 1 hour. So I use 6 candles per day. In a week, we have 6 into 5, 30. So 30 days, 30 candles, sorry. And the rest 15 minutes, we'll put it in another candle, 31. So that is why I use 31 as a period. And the 5 is nothing but the multiplier of this ATR. So you can have a lesser ATR, like say for example 2 or 3, if the instrument is not bigger in volatility. If the instrument has much volatility, then we should have a bigger number, like for example 3, 4, 5. So these numbers we'll have to backtest it. It's not like a written in paper that you can use only 5, that will work, 4 won't work. We can't say that. For Nifty, 4.5, 5 will work. If you're talking about Bitcoin, that's a very higher volatility, it might have a different ATR period factor.
So Sundar, this positional strategy that we are going to discuss, is it plain buying, selling on Supertrend on the 1 hour time frame, or is it something different?
All right, so this is a good question. So if we have only one time frame, that is a higher time frame, probably you will get very less signals, like 40 to 50 signals in a year. But what happens is, in the higher time frame will be ever be in the uptrend, all right, but you might get into a lot of stop losses, but you have to re-enter the trade. How will you do it? There is a problem, right? So what I use is, I use a multi-timeframe analysis here. So I have a Supertrend on a higher time frame and have another Supertrend on the lower time frame as well. So here we have a Supertrend on 1 hour time frame. So I have a Supertrend on 15-minute time frame as well. Okay. Yeah. So let's go to the chart. So when I use multi-time frame analysis on 2 time frames, for example, for on 1 hour and 15 minutes, I'll have a lot of signals, but what we will be doing is how to get into trades and how to re-enter trades even if we get a stop loss, because 1 hour time frame is a bigger time frame. So we might be getting a entry, and for even for a 1 month period, we won't get another entry at all. The markets will be ever be trending. For example, in the years like 2023, the markets were ever uptrending. We did not have a proper downtrend till the end of the year, right? So in those type of period, you won't even get an entry again. So that is the point in time where you will need lower time frame confluence as well. For example, let us go back. This is on 1 hour time frame. Let us go back.
The right one is 1 hour
Yeah.
and the left one is 15 minutes.
15 minutes.
Okay.
Yes. Yeah. So here we have put 15 minutes on the left hand. We have put 1 hour on the right hand side. Here on 15-minute time frame, I chosen 125 period. So 125 is nothing but 15-minute candles on a 5 days on a week. Okay. So the same way how we chose 31 period on 1 hour time frame, we chose 125 as.
So whatever you're doing, whatever period you're taking it for the entire week.
Entire week on the 5 trading days in a week, right? Yeah. So we have taken that and we have applied here. So in Supertrend, what we do, whenever the trend changes, we will take a trade, right? So here what is happening is the markets were in uptrend. Forget about which day and time. In here, the markets were started to downtrend because in the Supertrend, here the candle has broken the previous Supertrend level, right? And it has closed below it. Whenever it closes, the candle closes below it, we get a trade on the short signal, correct? We all know that. So here, when you go here, and the 1 hour time frame, here, 10 February 25, we got a signal. So what we do is, we take this as the stop loss. Okay. So this ATR is the stop loss for this trade. With 90 points as a stop loss, we take a short trade here.
Okay, a fixed stop loss of 90 points.
Yes.
And you take a short trade.
Short trade.
Whatever is the ATR at that point.
ATR at that point.
Okay.
So why we do this is because this actually has taken in consideration the volatility of the period. All right. So this has taken the whole week's average. So this will give us the stop loss. So what ATR does is it tells what is the average true range for the past period. So the average true range is this much, then we'll have the same as the stop loss, correct? So we have taken a trade here. So what happens? We have taken a trade. Whenever the first candle breaks, we have taken a trade. Let us see if it has broken 90 points here. 434 to 493. No, it has not broken the stop loss and the market started moving. So this is case 1 where we have taken a trade and the market started moving in our favor. So what I do is we need to have a trailing based stop losses. Supertrend already does trailing in our favor. But what we need to do is, in trading, we always have that expectancy, right? We always expect a trade to win like 4 hour, 5 hour, 6 hour. In Supertrend also, markets will give you more than 4 hour, 5 hour, 6 hour. But historically, when you backtest, it is good that you start trailing your trades when it has hit 5 hour. For example, here, your stop loss is around 90 points. Okay. So 5 times of 90 is 450. So when the markets have moved 450 points, you have to start trailing your trades. Okay. So how you start trailing is, you start trailing on the lower time frame.
So you're saying only after 5 hour,
yes.
5 times of your stop loss, do you start trailing?
Start trailing. You will have a stop loss in place, but your profit trailing will be only after 5 hour.
Okay.
Yeah. So once it hits 5 hour, what we do is, we'll start trailing on the 15-minute time frame here. Let us take this case here. The low of the candle is 429. So our trailing will start only at 450 points. That is somewhere around 22,000.
Roughly 23,000.
Yeah, roughly 23,000. So when the markets hit 23,000, yeah, somewhere here, roughly 23,000.
Okay, this candle.
Yeah, this candle. So this candle, right? So let us come to this candle. So whenever market hits like 5 hour, we have to start trailing in the shorter time frame. The reason is we can't trail in the higher time frame because we'll have a higher stop loss, higher trailing based stop loss. But when we come to the lower time frame, it will have a lower trailing based stop loss. So once we hit 5 hour, we'll look into the 15-minute time frame on this chart. Okay. Here, the stop loss, which is the stop loss, this will be your stop loss. This is where you will be getting out. Okay.
So this will be a hard stop loss in the system, or you will wait for a candle close above this?
No, this is a hard stop loss. We can't wait for the candle close. It will be a hard stop when we hit this 15-minute time frame super trend. So this is case 1. All right. So now we have hit the stop loss. Okay, the trade is over. We got the profits, whatever you got. Now what happens is, still in the upper time frame, the higher time frame, still the markets are downtrending. There is no change in the signal. All right. So we need to get into the trade again. So now if you see in the lower time frame, higher time frame will always be on the downward bias. When you see in the lower time frame, what happens is, you will find trade signals on the longer side here. But in the higher time frame, it is on the short bias. What I do is, my system will not take this long entry here. Okay. It will skip this trade completely altogether. My system will keep looking for another short trade. So I'll wait for this confluence to come in, where the super trend also in the shorter time frame also completely turns red. So here what happens is, I'm getting another trade here. So my system will go at the short of this candle. This is a candle where it is closing down. So this will be my entry for the next trade on the short side. So here what happened is, this is the last candle on that day. It has closed, so I can't take a trade that day. I have to wait for the next day. I have to wait for the next day. What happens is, this candle comes in. This is what the break happens. This is where I will take a next short trade.
So whenever the candle gives a proper break below this line, you will take a trade.
Yes. First we need to wait for the super trend to change into downward bias. Okay. It has changed here. Yeah. So, but what happens is, that is the end of the day. We do not have any more candles on that day. So wait for the next day to come. Okay. On the next day, we wait for this candle to break. Okay. This is the point. So we take a trade here.
And you take on candle close?
No. We take trade on the entry point. Whatever is the hard point, this is a stop loss, we take at the break of that point. So we do not wait for the candle.
So like the low of that candle?
Yes, the low of this candle, we take the trade.
Okay.
And what will be the stop loss? The stop loss will be always be on the higher time frame. The stop loss will always be on the higher time frame or not on the shorter time frame. Because on the shorter time frame, your stop loss will be like 40 points, 50 points. If you keep that stop loss, obviously your trade is going to end in the loss, because there will be much volatility. Even in higher time frame, we have like 90 points as the average true range. If you keep anything lower than that, we know ourselves that the markets are moving in bigger range than that, this stop loss, right? So what we do is, we take another trade here. We keep the same stop loss, like how many points here? 101 points here. 101 point will be our stop loss. Okay, from here. Then we keep on going into the same case again. We wait for the 5 hour to come, 500 points in our favor. Only then what we do is, we will take a exit or the next trade. Okay. Yeah. So what happens is, when we take a trade here, we wait for 500 points to come in our favor. Okay. Let us check what is the low of this. What is the low of this candle? This is where we took a trade. Low of this candle is around 23,090.
Okay.
So wait for 500 points. Let us take around 22,500. So let us wait for 22,500 to come here. So it has actually come really fast here, 22,500. So when we get 22,500, what we do, this is the candle, right? So what we mark this candle. Okay. So when we mark this candle, and we look for data in this 15-minute time frame. Yeah, correct. Yeah. So we mark that candle. When we come to the shorter time frame, we look for stop loss here on this time frame. Okay. So here there is no stop loss being hit. The trailing stop loss hasn't been hit. So what happens is, when we wait for 5 hour and start trailing, markets will give us more rewards than that. So we always have to keep our stop loss as limited and our profits as like open-ended. It's not unlimited, open-ended. We have to give markets to work in our favor.
So Sundar, in this case, when the markets, like nowhere did your stop loss get hit.
Yes, yeah.
Your stop loss, I believe, will keep getting revised as this line moves down.
Yes, exactly, yeah.
And at this particular point, your stop loss will be here.
Exactly.
And you will exit on this big green candle. Correct?
Exactly, yes, right. Yeah. So my stop loss will be hit only around 22,300. So my profit target was 22,500, 500 points. So what market did was, it gave me additional 200 points. So in this way, what really market does is, when we give markets enough room to breathe and move, it will move aggressively in our favor. We should not keep like hard 5 hour, I am going to get out. No, markets will give even 10 hour. There have been trades where I started trailing from 5 hour, it has went till 15 hour. Even in this year period, it has went till 15 hour sometimes. So we have to give markets its own time. All right, so let us see here, market has come here, we exited our trade here. So we need to check what is happening here in the higher time frame.
Okay.
This is the candle. So what is happening here, market has moved here, we got out of the trade. Now we have to wait for another trade in the same direction as the higher time frame.
Okay.
So what happens here, markets come here, and here on the higher time frame the trend actually changes.
Right.
Only here on the higher time frame and 1 hour the trend changes to uptrend.
Correct.
So here what we do is when the trend changes, this is where we are going to take long trades.
This place, 5th March.
Exactly. We will be taking a long trade here.
Okay.
So when we take a long trade, what will be the stop loss?
74
points will be a stop loss.
Okay.
So let us check here what happens. Will has 74 points have been hit or not? The high is 483. 74 will be like 410, 400, 409 somewhere around. Let us check if the stop loss is hit or not on the horizontal bar. Yeah, the stop loss is hit here, right? So we took a long trade after this trade. We took a long trade. Stop loss has been hit. So once the stop loss has been hit, I have told you again, we need to have a lower time frame confluence. Otherwise, what happens? The stop loss will be hit, markets will keep trending. We will not even have a trade. We should not go and enter on the high of that candle. We should not do that.
Correct.
So Supertrend gives a really nice opportunity when we have multi-time frame. It will give you an entry. Markets will give you another entry to get in. So here the stop loss has hit. Let us see here what happens. Stop loss would have hit somewhere here, somewhere here. What happens is when this candle breaks, sometimes what happens is on the shorter time frame as well, the trends change. Here luckily the trend hasn't changed here. So what we have to do is we have to take trade in the high of this candle again.
Okay.
And the stop loss will be the swing low from where we took the trade.
Okay.
So here we took the trade. This candle we took the trade.
Correct.
So from here to the high, which is the swing low, that is around 380 to 543, 150 points. This will be the stop loss for the next trade.
Okay.
Reason is, once we hit a stop loss, if the markets give you a new trade in the direction change, then it is good. We can have this stop loss. But the direction hasn't changed. Only that the trend hasn't changed. Only we have got whipsaw. So in that case, we have to have this whipsaw swing low as the stop loss.
So you will enter again at the swing high?
Yes, we will enter again at the highs here with this swing as the stop loss.
Okay.
So this is the maximum swing here. From this to here, this will be the stop loss.
Got it.
The reason is, what happens is if we keep the same stop loss again here, there are chances that markets will hit your stop loss again.
Now Sundar, you talked about re-entries. Now let us say that I re-entered a trade and the stop loss gets hit again. So will you take another entry?
Yes, definitely. I have to take another entry because we cannot lose a trade. That can be even a 5 or 10 hour trade. We can't lose that. So what happens is, again we have to re-enter with the same swing low. For example, you took a trade here and you hit a stop loss here again. Then we have to take the same swing low as your new stop loss. So in the same direction, you can try at least 2 times. In the same direction, you can take a trade. So that we can.
So let's say we hit a stop loss here.
Okay.
Then we re-enter again at the high.
Yeah.
Somewhere here.
Okay.
The stop loss again gets hit.
Okay. Yes.
And then we enter somewhere here.
Yeah.
And maybe this trade worked in our favor.
Yes. Yeah. So this was the initial stop loss which we had. We took another trade. For example, this also has been hit. Then means what happens is we have to take this as a new stop loss and trade in the same direction.
Okay. So
Okay.
in this means that there can be a series of losses, right?
Yes, there can be series of losses, but we can limit it to only 2 entries in the same direction.
Okay.
When the super trend on the lower time frame hasn't changed, we can take only 2 trades in that period. For example, in here, the super trend hasn't changed from upward bias to downward bias. So in this upward bias, we can try for 2 times. If it hits stop loss again, then leave the trade. You will get another entry. You can take another entry here because when super trend on higher time frame also comes into downtrend, we can take another entry here. So what really it does is, it will give us trades in that direction and it will give an opportunity to re-enter. What it doesn't let you do is, for example, sometimes what happens is, when we miss a trade, we have to go and get a trade on the high of this candle, right? So we can't keep on doing that. Supertrend, what it will do is, luckily it will change direction and it will give a new trade in that direction. So higher time frame, if it is a long, we are looking for only long trades. Let us go here. Let us take this example here. Let us take this day. So here, when we actually go into this place, So that is 13 March. Okay. So here if you see, the super trend on the higher time frame is still on the upward bias, but a super trend on the lower time, what it does is keeps on changing. So now this noise, this will clear out this noise here. So we always have to depend on the higher time frame confluence. We cannot keep trading taking all the signals on the lower time frame. That's why people say trade on the higher time frame, but it is not easy always to trade on the higher time frame, because higher time frames will have to keep higher stop losses. Your position sizing will lower down, your risk have to be the same, so your position size will be smaller. But when you have a smaller time frame also as a helper with you, it will help you to give you good entry points, and your stop loss will also be in the same way. So here it has not given any short trades, but on the shorter time frame you have got a lot of short trades here.
Right.
Here what happened is, when the markets here, when it is in the upward bias, we got a lot of short trades. But what we do is, we do not take short trades, we take only long trades. Even if we took a long trade, it took a hit, again the next trade we are going to keep this swing as the stop loss. So when we keep this swing and enter here, this swing will not be hit. So the trade will be running long, correct? So this is what the trade does. So here let us take this swing as, like for example, what 620 to 500, so 120 points. So 120 points is a stop loss, then our profit target when we will start trailing is 5 times into 120, that is almost 600 points. So once we get 600 points, let us say 22,600 is here, we'll wait for 23,200. So 22,600 we got a long trade here, we wait for 23,200, so 23,200 is here. So once we come to 23,200, our super trend on 15-minute time frame will be our stop loss. So this is where we got our stop loss, 23,600.
So Sundar, simply speaking, that even if you have a series of 5 losses, you just need one big winner.
Exactly.
And it will more or less take care of those 5 losses.
That is the reason. So why I'm talking about 5 hour, you can even have 6 hour, 7 hour. This number I have come across after researching and backtesting a lot of data. Okay. So as in always as a trend follower, we know that out of 10 trades, only 3 to 4 trades will win. In that 3 to 4 trades, only 1 or 2 trades will hit the ball out of the park. It always happens. So we always have to give markets that chance to happen. Otherwise, trend following will not work at all. We need to keep on trailing the trade to win big.
I think it is the nature of trend following systems that majority of your traders will lose money. But what you have to make sure is that you lose small whenever you lose. And like Sundar mentioned, 5-hour type trades, when you're making money, just ensure you make big money. Otherwise, in net, you cannot remain positive.
Exactly. So emotionally what happens is, a lot of traders can't hold 5 or 6 or 7 hour trades, but over the period of time when you keep trading, when you do this as a job, then you get accustomed to it, because you know that you can't take 3 hours and go home in a trend following system. You know that there will be next 10 trades as a losses, next 15 trades as a losses. We will definitely get in trend following, we will get big drawdowns, but one such trade will get you out of the drawdown. So we have to make sure that doesn't happen in the wrong way. We should not exit early, we should not skip that trade thinking this also will be a loss. We shouldn't do that. So in super trend, what happens is, higher time frame trades are fine, but we need a helper in the lower time frame to have the confluence to give us a very rigid stop loss trailing. So when we use both the time frames, it will give us better trades, better way to exit the profitable trades.
And Sundar, when you take these trades, when you enter the long and short, do you trade it via futures only, or you use options?
I use only futures because I do not use spot market, because options actually follows futures. So I use only futures chart. So how I trade is, once I get a long signal, I do not buy options. We should not buy options also. So I do synthetic futures. So synthetic futures is like, if you want to go long, you buy one lot of call option and sell one lot of put option. So that takes care of your theta decay, the extra premium that you pay in long naked calls, that doesn't happen in synthetic futures. So what I do is, if I'm trading one lot in futures, then I have to buy one lot of call option and one lot of put options. So that will be synthetic futures.
I think Sundar, what you've shared is a very refreshing take on positional trading, especially with regard to super trend. Why? Because most of the people are trading just one time frame, taking confirmation from a higher time frame, being in the right side of the trend.
Exactly.
Is a good thing to do, and you've shown the right way to do it. Now, if somebody is to start doing a trend following strategy like this, what would your suggestion be to them?
I would say is definitely trend following. Majority of traders are trend followers. Trend following is where the majority of the money flows in. It's not like mean reversal, taking like 1 or 2 hour trades won't help you in the long run. In the long run, only trend followers will make more money. So I seriously advise every single trader, even a newbie, has to start with trend following, and that too they have to start with positional trading, no intraday. Let them start with positional trading. That will be easy on their emotion, because positional trading, the trades will run for 2 days, 3 days, 4 days. They don't have to worry about what happens next 5th minute candle or next 15th minute candle. They don't have to worry. So newbie traders should definitely approach positional trend following first. When they get comfortable with this, then they can start scaling into intraday trading, intraday time frame, short-term trading they can get into.
I think Sundar, you've explained the whole concept very beautifully and in a manner that is very simple and easy to understand for everyone. Thank you so much for giving us your time and sharing your valuable insights with everybody.
Thank you, Arjun. Thanks for having me here, and thanks to Groww team for organizing this wonderful initiative. A lot of traders would definitely be benefiting from this.
Thanks.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.